Hello everyone, my name is Advait Italia, and today, as always, I would like to share my insights, my learning, and my view going forward about the markets. So today was basically a start of a pullback, or is it a range-based consolidations? So we will try to answer these questions in today's video. So without further ado, let's jump on into the analysis. So as you guys know, I start from weekly time frame and then daily time frame and then intraday time frame. And then I also discuss, any important fundamental changes or data releases in the markets, which can highly impact the Nasdaq futures. So let's get started and let me show you what I have in the terms of learning in the weekly time frame. So I wanted to discuss two important points in the weekly time frame. As you can see over here, we perfectly got rejected from the top of the Bollinger Band last week. And today, most importantly, we tested the 5-day moving average on the weekly time frame. So I kept on discussing this in the last week that if and when we have a start of a pullback, the first line of defense is going to be the 5-day moving average. So let me show you in the charts what I mean. So this is the chart of the weekly time frame. And as you know, like last week, I discussed that if we, start a pullback or if there is a correction or a start of correction, then the first line of defense is going to be this blue line, that is the 5-day moving average on the weekly time frame. So we perfectly, tested it. We perfectly bounced from it. So this is the significance of the 5-day moving average. The moment the price hit the 5-day moving average, it consolidated for a little bit and then again bounced back. So will this 5-day moving average hold forever? Absolutely not. But what we want to know is, this is a level of support. So we better make sure that, whenever the prices, approach this support level, then we should be aware that this is the support zone. So we tested perfectly today and we also bounced from it. So let's see what happens, because today is the start of the week. So, we may, very well, break it and close below it. But as of now, this support level, that is the 5-day moving average, which corresponds to the 15,780 level, is holding. So this is my learning from the weekly time frame. And now let's go to the daily time frame. And that's where the actual crux is. So in the daily time frame, I wanted to discuss 2 to 3 important points. The first point is, today, like finally, we tried to break out of the range that we were in since 2 to 3 weeks. So let me show you the actual charts and you can see what I'm talking about. So this is the daily charts, and in this daily charts, you can see over here, I will highlight the range. So this was the range that I was talking about. So almost since, 2 to 3 weeks, we were just consolidating and doing nothing, in these 3 weeks or 2 weeks, I would say. So finally, today, we tried to get out of this range. So the breakout was on downside. So as you can see over here, we tried to go down. We tested the median of the Bollinger Band. That was very important. So remember last Friday, we closed above the 5-day, above the 9-day, and above the 13-day moving averages. So the sentiment going into this week was very, very positive. But again, as I said, that, once we, destroy, or once we cut off the 5-day, the 9-day and the 13-day moving average, the next big level of support was the 26-day moving average that I highlighted in red over here. So what happened is today was a release of a lot of economic data, specifically on the manufacturing side. So the factory orders month over month data was released. So that was very, very kind of unexpectedly negative, because it seems as if the growth is slowing down. And that was the start of, the fall, slowdown of the markets. Like when it got released, the markets kept on falling. So my strategy going into today's session was, if it breaks the 13-day moving average that it was holding since last 2 days over here, then the next level of support was the median of the Bollinger Band, and actual final level of support was the red line that you see, that is 26-day moving average. Now, the reason why this median Bollinger Band did not hold is because, as you can see over here, for NASDAQ futures contracts or for the Qs or the QQQ, instrument, 1 day of, 1% or 2% day is very, very normal. So my thesis going into today's session was, if we get, a 2% day, then that is within the reach of the 26-day moving average. So I was waiting for that, 26-day moving average to confirm. But on the other side, I also knew that within a single day, all the three moving average, that is the 5-day, the 13-day, and the 26-day, cannot be destroyed. It's very, very rare. So I was looking for a long opportunity near these levels so that I can be sure that, I can get a good counter trend move. So that's exactly what happened. So as you can see over here in the daily time frame, we started to do an aggressive pullback in the morning, and we are actually just recovering from those level of losses. Now the thing is, this counter trend rally, that is the recovery, came in the second half of the session. So the closing of today is very, very important. Because the damage is already done. So now we are below the 5-day, we are below the 13-day. So the test of 26-day is very, very imminent within this week. So in this week, you might, there is a very high chance that we will test this level, that is 15,670. So be prepared for it, and because that's the only next major support available right now. And let's say if we get another 2% pullback day, then the final level of support is going to be this cream yellow line, that is the 50-day moving average. So be take a screenshot of these levels, be aware of these support zones, so that you can make an informed decision. So these are my takeaways from the daily chart. And now let's go to the intraday charts, wherein I share more tactical insights about the intraday trading. So let us discuss the intraday charts. So I wanted to show you like the importance of pivot levels and why I stress a lot about pivot levels. So as you can see today, like it exactly holded the S3 pivot level. Now let me show that to you in the charts. So this is going to be the 5-minute chart for today, that is the intraday. And as you can see over here, like I'm in Pacific time zone, so my 6:30 is the market opening time. So on 6:30, you can see over here that we started the markets with consolidating. So we actually did nothing for almost first half an hour or first 45 minutes. And then after that, we actually tried to break down aggressively. So going into the today's session, my strategy or my planning was, I knew that over here on 7 o'clock, there is a big data release. So as I always tell to my viewers that if you're doing the intraday trading, then the first hour of the session is highly volatile. So avoid trading at least first 30 to 45 minutes. So that's exactly what I do. So I waited for the first hour, that is my 7:30 timing according to Pacific timing. So I wanted to wait till 7:30 and see like how the market reacts to the economic data, that is the factory orders data, and then take all the trade. So as you can see over here, 7 o'clock the data got released, and over here you can see like we were just consolidating. So neither we had a bullish crossover of the 5 or 26, neither we have a pivot level test. So I was just waiting and seeing like what is happening in the markets, because by that time we were already 0.5% plus down. So I was just waiting to see how deep it is going to be, because on the back of the mind I was very, very clear that there is no market moving news today. So we might get a very good recovery rally after a few hours. So as you can see, after 7:30, that is this thing, we actually tested the S3, that is the first green line that you see is the S1. So you might ask like, what are these lines? These are the pivot lines. So when you use the pivot indicator, it shows you these green lines are the support, and then the red line are the resistance. So as you can see over here, after 7:30, I was hyper active and I was seeing and watching like where can I actually trade or where can I make an entry. So my thesis was, since we lost the 13-day moving average over here, so you can see this level was 15,890. So over here 15,890 got lost very quickly in even at the start of the session. So my thesis was, either we can have a support near the 26-day moving average, that is this red line. But the problem was, this red line, look at where it is 672. Now, if you go to the intraday charts, 672, almost, it's near the S3 level. Now, I had an option to wait and see like if it breaks down the S3. But as you can see over here, after, coming near S3 level, it kept on consolidating and the aggressive selling stopped. So I thought that was a really nice point to enter and take a counter trend position. That is, this trend was the downtrend. Take a counter trend position, see if you get, 15-20 points and then get away. So that is exactly, what I did. Like after we recovered this consolidation, after we broke out of this consolidation, I took a long entry. But now my fear was, I don't know how high it's gonna go. Like I didn't knew the intensity of the move. So that is why I got a conservative, 15-20 points, and then I just exit out of the position. But what you could have done is you could have also taken a trailing stop loss order. So that is very important, because then you don't have a incentive to actually see and guess what's happening. So we again tested the VWAP over here, and then we just consolidated. So over here you can see that S3 was a very big level of support. And that's exactly what the QQQs were pointing. So if you see the QQQs, that also, this is the QQQ chart, and that also took a support at S3. So if you see over here, 1, 2 and 3, so it took a support at S3, even QQQs, and it was behaving same way in line with the Nasdaq futures contracts. Even if you look at the VIX as well, the VXN, that is the VIX that is tracking Nasdaq contracts only. So this was getting rejected at the R2 level. So it tried to breach the R2 level a couple of times over here, but it did not successfully broke out. So that was also giving a confirmation that we can have a counter trend rally and then consolidate for a bit. So that's exactly what we did over here. So we had a counter trend rally, and then we just consolidated and took the support at S2 level over here. So the S3 level was acting as a very nice level. Also, if you look at the 1 hour chart, on the first day itself, on the hourly time frame, we broke the S1 level. So I knew that in one single day, breaking two support levels, that is S1 and S2, is very highly unlikely. So the risk reward was in my favor. And that is why it did make sense to take a counter trend position and profit from it. And that is exactly what happened, because if you can see over here, after 7 o'clock, there was no big news. There was only bond auction and nothing else. So I knew that if you don't have a big catalyst, if you don't have a market moving news, and we already corrected a lot, then there is a very high incentive for an intraday trader to take a counter trend position and profit from it. So this was my learnings from intraday charts today, and my confirmations and my thought process why I did what I did. So yeah, and now let's discuss the macroeconomic event. So going on to the daily chart, to summarize this entire video, what is happening right now? The thing that is happening in the markets right now is markets are just waiting for the next big catalyst. So what is the next big catalyst? Now, since we are almost in the first week of December, the second week of December, that is 12th and 11th December, two main big events are going to happen. The first is the release of the inflation data, and the second is the FOMC meeting. Now, what is FOMC meeting? Basically, the Federal Reserve Chairman Jerome Powell, that is the chairman of the Central Bank of United States, he decides on that day like what will be the level of interest rates. He can cut it and he can increase it as well. So it all depends on the inflation data. If inflation data comes in lower than expected, then we will see a pause or keeping the interest rate same. But if the inflation surprises us on the upside, then the Federal Reserve Chairman Jerome Powell will have the incentive to raise the rates again or keep the rates higher for longer. So that's the logic behind, I mean, the fundamental logic behind, these news events. So that's exactly what is happening in the market right now. People are just waiting and chopping around. A lot of profit booking has happened. A lot of selling has happened over here because as you guys already know, we are coming from an aggressively, a bull cycle. So it is perfectly natural and normal. There is no sign to worry right now. Markets are behaving very as they should be. So yeah, the next big level of support is going to be this 26-day moving average that I think will be tested this week. And the ultimate level of support is going to be the 50-day moving average. So this is my take on the markets, and this is my summary about my observations and learnings. So I would like to thank you, all of you, for your time, for viewing this video. And if possible, please like, share, and subscribe. I hope that you are learning very much, you're getting quality content, and I hope for us to grow together. So that's the whole purpose of me creating these videos and trying to share whatever knowledge that I have. So please feel free to subscribe, like, share, and also please comment your views so that I come to know that what topic would you like me to discuss going forward. So yeah, really thank you for your time, and until next time, see you guys tomorrow.